Hi, everyone. Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, it's been busy since we last talked, guys. Very busy week. Macro-wise, I know people are waiting for CPI numbers on Friday, but it has definitely, been quieter. So we'll just jump right in with what's actually happening in the market. All right. First up this week, we're going to talk about MakerDAO. So MakerDAO, the decentralized stablecoin issuer, saw a huge influx of deposits into their DAI savings rate product, DSR for short, on Monday, following the new rollout of a new rate called the EDSR, which offers 8% yield on DAI deposited into the DSR, up to 20% utilization, which is about 200 million. So the rate is temporary, and it was designed to increase the circulating supply of DAI, which has dropped since dropped starting end of last year, and also raise cash so Maker can use that DAI to purchase more RWA assets. The interest rate paid comes directly from Maker's accumulated revenues and is only temporary, because once it hits a certain amount, the interest rate will come down. So a lot of people are looking at this and they're like, "This is great. This is like this is more legit way to get some yield right now in the market." The more interesting thing that people are doing, though, however, is that people are taking advantage of an arbitrage opportunity within Maker. So Maker also has a lend borrow platform called Spark Protocol. It's just a fork of Aave, so very similar. And Spark was kind of designed to offer DAI and DAI derivative assets at very low rates. So you can borrow DAI at like 3.2%. And so what a lot of people were doing was they were going to Spark, borrowing DAI at 3%, and then depositing it into the DSR to earn 8% and capturing like a roughly 5% arbitrage. So obviously that kind of defeated the purpose of like creating new DAI. But as of Tuesday morning or yesterday morning, a forum post went up from the founder, Rune Christensen, and he suggested lowering the rate to 5% and also raising the rate to borrow DAI on Spark from 3 to 5%, reducing that potential ARB that users can make. So these modifications are still in draft form and governance, so they haven't actually gone through yet. But in the meantime, the utilization level has been hit. That extra yield has gone from 8% to 5 and some change, but there's still an ARB there for people to capture between Spark and the DSR. So hopefully the protocol looks like they'll probably try to close that sometime soon. So Maker, however, has seen about $500 million in DAI inflows since Monday as a result of this rate. With all of this, though, Maker is down 8% for the week. All right, next up, we're going to talk about Goldfinch. So Goldfinch is a decentralized lend borrow protocol that services emerging market small businesses. So this week they actually experienced their first default on a $5 million loan, which equated to about 4% of TVL. So according to user accounts and governance posts, the DAO knew about the issues with this particular issuer last December, but had not been able to do anything until the borrower officially defaulted on the loan after failing to make interest payments, although they had previously breached their covenants. So a lot of discussion kind of going on in the, kind of under collateralized or just about collateralized loan world with, how do you kind of like diligence products on the other end of this and get more updated information? Only part of this transaction is on chain. So, I think these are kind of the things that like some of these RWA or real world asset products need to solve for. But this was interesting since, that this is a small loan, but, we'll see if it becomes any kind of a pattern. Obviously, community members not super happy about the default. Goldfinch's token, GFI, is down 4.8% for the week. All right, next up we got GMX. So GMX, the decentralized perpetual swap trading platform, they launched their V2 version last week. And their update is focused on a bunch of different stuff, but specifically they were trying to improve a number of issues on their V1. The first being they were lowering fees to be more competitive with DYDX, the number one decentralized derivative DEX in the space. They implemented price impacts when previously you could basically trade something with no slippage. And so a lot of people were using that feature to kind of exploit the protocol. They basically changed that so there is slippage now. And, if there is an exploit, you can't, exploit that. What was the next one? They also added funding fees to balance the mismatch in open interest. So previously, instead of having a funding fee for the perpetual swaps, they had what was called like a borrowing fee. And basically the way it was structured, it didn't lead to arbitrageurs coming in and rebalancing pools that were off. And so what you ended up having was just this like crazy mismatch in the open interest on the platform. And then the last thing they did was they actually changed the structure of the GLP, which is basically the generalized pool that like all collateral assets go into. And the purpose here was to just provide better liquidity, but also better protections from volatility than previously. Since basically some people would get really hurt if there was volatility in like one really liquid asset, versus now it's going to be a bit more siloed. So GMX made a splash with their original product late last year. They stole a lot of market share from DYDX at the time, but they've since cooled off. GMX is currently the fourth largest decentralized derivatives exchange by volume. However, volumes have seen a slight decrease of 1%, however, since the launch last week, the volumes have seen a slight increase of 1% week over week. It's likely going to take some time, though, for the impact of the V2 upgrade to be reflected in GMX's fundamentals. With all this, GMX is basically flat for the week. All right. Last but not least, I have to talk about Curve. I got to give you guys an update because last week's saga did not end on Wednesday. Basically, quick recap, as you guys know, Curve was exploited, funds were stolen, and then more importantly, the founder of Curve, Igorov, his loans on Aave and other DeFi platforms were at risk of liquidation as the Curve price fell. So since last Wednesday, we saw 2 additional OTC deals done for Curve. So all in all, Igorov sold about 106 million Curve tokens for 40 cents each. And for context, the market price is about 60 cents. So that was pretty good in terms of, for him, there would have no way been that much liquidity on the open market. A lot of the OTC investors that stepped in included protocols, actually. So like Gnosis Chain bought some, Reserve Protocol. Who else? I think Aave is considering buying some. And then also a lot of investors such as DWF Labs, Market Maker Wintermute, DCF God, Justin Sun, and a lot of others. So like I mentioned, since then, there has been a proposal from Aave governance to purchase $2 million of Curve token for its treasury to better align incentives. This is still in discussion. And then finally, last Friday, some good news. The hacker agreed to return funds to Alchemix and JPEG, 2 of the protocols impacted, along with the return of partial funds to Curve. All of this was done in exchange for bounties. The hacker sent a bit of a snarky note about it, but funds were returned. However, the hacker didn't return all funds, and Curve turned over the bounty of $1.8 million to the community for whoever could identify the hacker in any way that could lead to their arrest and recovery of assets. Since last week, Curve's price has dramatically improved, and it is up 4% for the week. All right, that's all I got for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.